Hi guys, in this video I want to show you how to add a stop loss order and exit order to your option trade, let's say a bullish option trade. Adding stop loss and exit to an option order is a little bit different than adding stop loss and exit to a stock trade. With stocks you would simply set the ranges. So for example, if I look at, let's say, Pepsi, and I load the price chart, and maybe let me zoom in here, take that away. You can see, for example, this stock is dropping dramatically, bouncing here of 200-day moving average. Maybe it's going to go up, let's say, just to simulate. If I was bullish on this trade, I could say, I'm going to buy this stock for 138 bucks, 38 cents, and then anticipate a move towards next, let's say, resistance zone here, 142, and exit there. If the price of the Pepsi shares reach level of 142, I would exit, and I could set my stop loss somewhere at 136. So if the stock price drops below this level, my exit would be triggered and I'm out of the trade. Right? So that's very simple with stocks. With options, it's a little bit different. First of all, we're not going to be buying shares of the company. We're going to be buying like a call contract if we anticipate the upwards move of the price of the stock. So let me just simulate that. If we want to do the same thing but with options, how can we do this? How can I actually enter here with a call contract and exit at the level 142 and basically with a win and stop loss around 36? With option contracts, definitely we operate with premiums. Remember, not with price of the underlying, with premiums that are paid for the option contracts. So let me do just a simple trade here with options and show you how I would do that, how I would create a stop loss and exit. Let me go to the trade tab. Now I'm gonna find some contracts, let's say for 72 days here, and I would say, I want to buy a call, so a bullish trade, anticipating movement up at the level of 140. That's my strike price. Pepsi is trading 138 at the moment, but that's my at the money call. So I could say I just want to buy this. Now I don't have a stop loss in here at all, so it can just go up. I can either, my max risk in this trade is 460 bucks. And if I let this thing expire, worthless, so if the price drops down, I lose all of it. If it goes up, I have unlimited profit potential. So let me analyze this. Okay, you see this on this chart, if I just remove that one. Okay, max risk $460 and unlimited upward potential to making money. But I want to have a stop loss. I want to, like I said, I want to exit at 142, which would be around, giving me around $172 of profit from this trade. And also the other exit was 136 as far as I remember. So I would be having, let's say, 100 bucks of max loss, something like this. How can I do this? Well, I can just come back to the trade. I'm going to completely delete this order and I'm going to say something different. I'm not going to buy this contract simply. I'm going to right click here. This is in Thinkorswim platform. And I'm going to say, buy custom, and I'm going to say with OCO bracket. One cancels the other bracket. Okay, so I'm going to press that and it's going to pop an order entry with 3 items in it. I'm interested in only one contract. Remember, it was costing $460 if I would just buy right now 140's strike price, valid till April 16th. But now I have 2 other additional orders. First of those orders is an exit. So you see I'm exiting this 140 16th of April trade, one call, at the level of 560. Okay, so if the premium reaches 560 on this trade, I'm going to exit with 100 bucks more or less win. So if I click this, which price level do I need to reach? I don't know. Like if I just, I just see the premiums here, but how high would the Pepsi be then? Well, with help comes this little tool here from Thinkorswim telling me expected Pepsi price. So to kind of estimate what the price would be in order to get the premium of 560 in the upcoming days. How big of a move needs the Pepsi to do, so in order to get that premium. So I can see that simulated expected price would be 141.26 cents. So if this premium is connected sort of with a price movement of Pepsi to that level. So what if I change this and I just gonna say, how about 580? Okay, if I click that again, 41.70. So maybe 6 would be a good estimate here. Okay, so if I click that 142.14, I'm okay with that. I can also reduce this and calibrate it perfectly to whatever I want, like 95. I'm very close to 142 right now, you see. So how about exit? I said 136 would be a nice place to exit this trade. That's my third row in this order. You can see it's a market order stop loss. Okay, so they pre-created this order to be at the level of 360, and that would be exactly 136.83. Okay, so what if I want to be a little bit lower? Well, probably I want to exit when this is like 350, 136.61, maybe 330. I'm getting closer, 320. Well, let's say 325. I'm very close to 136.06. So now if I send this order in, what's gonna happen, you know, if I confirm this order, I see something like this. That's confirmation dialog box. I have 3 orders going in. First one, I'm buying at the money, call contract, you know, at strike price 140 for $460. You know, remember, you have to multiply this by 100. And then I'm creating an exit order, so with a premium expectancy of 5.95. So as soon as Pepsi goes up and reaches the level of price of the premium 5.95, I'm gonna exit with a win. Okay, and I can see actually my max profits and max losses here, which, you know, they cannot be really calculated in here, but you can already subtract these numbers, right? So you can see I would be making $135 of a win. Okay, now on the other side, exit stop loss would be here, 140 and premium 325. So if I subtract this, you can see it's the 135 as well. Okay, lower than the current price of the underlying. So I limit my max loss and I also limit my win potential. So I'm planning the trade from beginning till the end. I can send that in and I can have already a call contract order with stop loss here and exit here pre-planned. And that's basically how you do it. So thank you very much, Thinkorswim, for having this amazing tool in here. That's how you do it. If you don't have that tool in place, you can simply play around with the premiums and say, okay, how much of the premium do I want to get out of this trade? So what would be my return on investment? And then estimate this by just looking at the option chain and see how the price changes as you move. Your delta moves more away, being out of the money, you know, here, and getting into the money, you know. So if we're expecting a price move up by 5 points, then you can see that 5 points would mean basically a change of, you know, here we have $3 now. Stock market just opened, so the premiums change adjusted. But that's how you do it, and that's what I wanted to share with you guys. Hope you learned something, and I will see you on some other video. Ciao, ciao.